Okay, hello everyone. Welcome to this weekly trading roadmap with myself, Miltos. I'm going to be going through the adventure and risks and some of the risk and money management plan, or the risk and money management plan that I put together for this week. Obviously, that's a theoretical risk and money management plan, one that I will be looking at myself, and it has to do with my own sort of edge and what I look for in the market. So it just gives you guys a sort of guideline of what I'm looking at across the week and where I'm going to allocate my risk and my money in chips per se per day. So just to start off with Monday, we've got the Fed's Dudley in terms of risk events. Just give me a quick second to pull out one of these little pens so I can draw for you guys. Here we go. So we've got the Fed's Dudley and the Fed's Kashkari today. Not really big on the data front, really just these Fed speakers. Overall low relevance and 10% risk allocation. However, given that we don't have much going on in terms of the calendar, we have had news over the weekend. So let's not forget, over the weekend we've had some news out of Doha. So there was a meeting, an OPEC meeting in Doha, Qatar. Obviously we've heard some sort of rumors and a lot of talk of them reaching some sort of production freeze. So there was talk of a production freeze. Now that never came to fruition. Obviously Saudi Arabia and Russia were the ones that were really pushing for it. They were looking for that production freeze. Iran never came to the table to even discuss it. So that production freeze is now not happening as of today. The next OPEC meeting, or the next meeting of these oil ministers, is going to be taking place in June. So that's really the next time we're going to be taking a look at potential production freeze. But until now, we do not have any sort of production freeze at the minute. Now that's had some consequences in the market. Oil obviously having priced in basically that they were going to have this production freeze has effectively gapped down on the day. So this is a daily chart of oil. You could see we had a rally all the way up to about 41.90 and just came through that swing high in here. Didn't quite hold the bid. Started coming off a little bit into Friday, and then this was our gap down. So we gapped down. I think we opened at around 38. So yeah, the open was at 38.75. We had a bit of a move lower. Now we're catching a little bit of a bid. We still have that gap up until about the 40 buck area. So just keep that in mind. Obviously, that is going to be driving a lot of the moves across the energy sectors and the equity markets, because the equity markets actually gapped down as well because of this news. Even the bond space actually gapped up a little bit just on that news as well. Obviously, everything's now sort of rotating and shifting as we've opened so far out of balance. We're starting to try and move and test the previous days or weekly balances, so just keep that in mind. So that is pretty much what we've got on Monday. Looking over to Tuesday, we have the Zoo survey. Not as volatile as it used to be, but still worth, I guess, keeping an eye on. We've got the U.S. housing starts, building permits, and the Fed's erosion grant speaking on Tuesday. Medium risk allocation, medium relevance, and a 20% risk allocation. Moving over to Wednesday, we've got the German PPI, the UK ILO unemployment rate. Now, just remember, guys, from the BOE last week, they did make it very clear to us that because of these whole Brexit fears and the referendum that's going to be coming out, a lot of the news and data that's going to be coming out is not going to be as important for them. And because it's not as important for them and in their decision making, we have to now understand that potentially a lot of the data points out of the UK are not going to be as relevant for the market. Now, whether the market catches on to that quickly, I would suspect it would. So just bear in mind, if we do have any sort of moves on these UK data points, they could potentially be fadeable. We haven't seen evidence of that just yet, but if they are, take note of it and then start using that in your plan going ahead. And we also have US existing home sales on Wednesday. Medium relevance for myself on this day and 20% risk allocation. The main event of this week, obviously, we've got the ECB rate decision on Thursday. We also have the Swedish rate decision. UK retail sales, like I said, not as important as they were. the ECB rate decision, do keep an eye on that. Obviously, since the last ECB rate decision, equity markets have not really moved all that much at all. And I think the markets and investors are now a little bit hesitant because they haven't seen any sort of returns even after they've launched that so-called bazooka that Mario Draghi actually tried to impose onto the market. It seems as if the market's a little bit hesitant right now. So I'm wondering what they can actually say now to force another market move in their favor or push down the euro, because obviously the euro has been very buoyant recently, and I think that's something the ECB doesn't really like. But just keep an eye on that, obviously, and build your plans accordingly. Also, the European consumer confidence and the Philly Fed on Thursday. Overall, high relevance for that day and a 30% risk allocation. And then moving over to Friday, we've got the German European manufacturing PMI and services. So just keep an eye on that. Those figures for Friday, probably the main figures for myself. And then the US manufacturing PMI and the ECB survey. Overall, again, the medium relevance for me on that day and 20% risk allocation for that day in the week. Right. So that's a few of the things that I wanted to cover. Unfortunately, my Delta is not really working at the minute, so I'm just going to be using my Reuters terminal to show you guys just a few little things that I'm keeping an eye on. First, let's take a quick look over at the FX space. Just wanted to cover what I'm looking at. Just in the dollar, recently over the last couple of weeks, we've seen the dollar kind of pushing down in this descending pattern, this kind of wedge pattern. It's a falling wedge pattern, and I think more often than not, these falling wedge patterns is really good reversal indicators. Now, we've seen a lot of weakness in the dollar. The dollar's been getting hit relatively hard ever since it came off of this 100 mark. We're all the way down at 94s now. So the dollar is very weak in 2016 overall. Now, whether we can see a bit of a move now in the dollar to the upside if we break this pattern, I think it's purely technical. The Fed is still remaining quite dovish, but if they turn around and we start seeing a few more hawkish statements or whatever, it might be a catalyst for a break of this pattern. So I'm looking for any sort of potential catalyst for a break of this pattern. We've got this falling wedge pattern. If we can break and now hold above that, maybe we might start seeing a bit of a reversal sign. Now, what does that mean for us as traders? A lot of us tend to trade a major or some sort of pair with the dollar. I would say the best bet for me in trading dollar weakness would probably be the pound. Obviously, there is a lot of Brexit fears. We've seen overall, even though we've seen some strength in the euro, the pound's always been able to hold its offer, and it still has, and I just want to point this out, it still has an inside month from last month. We have an inside month pattern. The high of that is at 145.14 and the low of that at 139.02. Now, obviously, we can break to the upside. I would personally think, in terms of a setup, this looks great for a fade. If we were to break that inside month, false break it. So you can see if we false break that inside month here at 145.14, we're running into resistance at 145.77, at 146.68. This trend line over here as well. So if we were to break it to the upside and false break on any sort of dollar weakness, I think that would be a really interesting setup for a move back inside that inside month and a move back down. Obviously, if we don't break to the upside and we break to the downside, I think the downside break would be a lot more beneficial in that sort of environment, or had a lot more probability of working in that sort of environment. So if we break that 139.02 level, obviously the next real level you're looking at is this 138.33, and through there really you're looking for this potentially to fill in some of this previous buying tail. This whole thing, as we've been talking about since the beginning of the year, is a major buying tail from 2008, 2009, as you can see in this period in there. And I wouldn't expect this to just completely capitulate, but obviously just kind of fill this area in. But on the break of that, there could be a decent sort of move and flow. So just watch out for that. Obviously, at intraday traders, if you're trading that level or that area, and it's within the context of some dollar strength, so obviously we want the dollar to be rising, then potentially we could see a a nice move or continuation move in this cable, in this GBP chart. I mean, overall, if you see just the way the price action that we've been seeing so far, just this rolling over of prices, holding now, building value below these previous areas of support, now turn resistance. So within that context, that would probably be the currency pair I would be looking to trade. And obviously, I still don't think that the full extent of the fears of this potential Brexit have been priced in as of yet. So just keep an eye on that little chart there to see if there's any sort of continuation. Another chart, obviously, that's interesting, if we carry on with the dollar weakness, would be the yen, because the yen has been very strong recently. And the yen has been very strong, as you can see, put in a bit of a topping pattern in the US dollar JPY. So overall, if the yen does continue its strength, I think we're still holding below that 110 level. We've broken this flag. As you can see, we had the initiation move into the flag. We had the flag formation. We've now broken that flag, come below this 110 level. For me, as this is still building value below that 110 and holding 110 as resistance, I think there's still scope for us to test lower and touch that next real area of support at 105. So you see that support and previous resistance at 105.44. So that level for me is pretty interesting. In case we do get there, we could see a bit of a bounce, but until we get there, I think we're still in that previous value area, as you can see here. So this previous sort of range area, technically I still feel this could continue and move down to it. So under the context of dollar weakness, I would be probably sticking more towards the dollar yen cross rather than any other pair. So that's, I think, some of the main formations that we've got in the FX market. If we take a look over at the commodities, again, obviously we took a look quickly over at oil, just to keep, again, an eye on this and just look at the levels that we're looking at. If we look at the daily chart and just scrunch it up a little bit, we've been talking about this obviously again since the beginning of the year. We also had a bit of a falling wedge pattern, which these falling wedge patterns, I don't tend to see them as continuation patterns. We did see a break, but you know, for me personally, I've always found that you get really nice false breaks of these patterns. You tend to see a really quick flush to the downside. Usually that just creates the bottom, and then you see the move to the upside. We did come and test that area again. We double bottomed, came back inside. We've broken that wedge to the upside now, and we're sort of ranging. It seems as if for now, if you see this very large pivot area in here, we had pivot in here, up in here, support, resistance, 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 support. It seems as if for now we might be looking to just fill this area in, auction it off. If I could show you guys a profile, I'd like to show you guys a profile of this actually, because if you see a profile, like I was saying in my weekly market wrap, you're probably looking at something like this, where we've got a big cave in most probably volume and value in this little region here. Sorry, I put it a little bit higher, but it would be in this region here. So we're probably looking to fill that out for now. It seems like we might be looking to fill that out for now. We're sort of broadening in this formation. You can see this swing low is a little bit higher than the next swing low. So we're sort of broadening in this pattern. So we could be just looking to fill that area in and then make up our minds. For me, still the really key pivot area for me for the bulls is these 3482s. Just keep an eye on these 3482s. That is the important area, that double top. That's what confirmed our double bottom. We had a double bottom, we took out this double top. Now we're holding above that area. As long as we hold above these 3482s, I'm technically still medium term feeling as if we could still have a bull case in this market. So just keep an eye on that. If we do get below those 3482s, then I think we might have a bit of a case. Last chart I wanted to show you guys is gold. Gold at the minute, we've had a pretty strong bull run. If we just scrunch this up a little bit, we've had a pretty strong bull run since the beginning of the year. You could see we based out in here, completely just went parabolic in the beginning of the year. One of the best performing assets this year. And we've kind of just stalled up in this area. Now, in terms of the structure, it could still be seen as a flag formation, but just bear in mind, we did make a high in here. We came all the way back up, made this head formation, and then we tried to find a bid, couldn't get back above this level in here around the 1260 area, and now we've come back down. Now, in terms of a formation, that does start looking like a bit of a head and shoulders pattern with our neckline coming in right here. So if we break this area specifically, there could be some flow to the downside. Just keep an eye on this pattern. Obviously, the very key area for the bulls is this really big pivot area, as you can see in here, around the 1189 to 1193 area. This whole area for me is quite an important area for the bulls. So they need to guard that if they still want it to continue its uptrend. So in case we do break that this week for whatever reason, we have had a little bit of an inside day from Friday, which we sort of opened up a little higher. Now we're kind of closing in on that now. If we do hold below that inside day, we could have a case for it to come to the other side of that inside day. And like I said, the key area to be looking at is that neckline. If we get a breakthrough there, we could see a bit of flow. And in any other case, just looking at the flows that we saw last week and looking at the way the market's been trading, just bear in mind, guys, the volume and volatility that we've been seeing in the beginning of the year is no longer there at the minute. And it's a little bit thin. The market is very low volume. And it's a little bit more difficult to ascertain what the price action is saying, what the order flow is saying, because there's not as much paper in the market. When I say paper, I mean funds, bigger institutions putting on positions. And because of that, it's a little bit difficult to ascertain what's going on in the market. So based on that, I would highly recommend, even though I've shown you guys a theoretical risk and money management plan for the week, I, for one, will overall on the week will be decreasing my risk allocation this week just slightly, giving myself still enough chips to trade the ECB, which I think I still should give myself enough risk parameters for. But overall on the week, going forward, I'm just going to hold my chips a little bit more tight, because at the minute I'm not getting as many opportunities. You're really seeing about 1 or 2 opportunities at each day, and you have to trade them very well in order to make your day. And the rest of the day, you're really trying to pick and choose which opportunities. You really have to cherry pick and try and find the right opportunities to make your money for the day. In any case, the moral of the story is try and manage your money. Well, anyway, that's me for today. Good luck for the rest of the week, and we'll be speaking again tomorrow in my price ladder analysis stream. So thank you guys very much for listening, and bye-bye for now.